Hello, welcome to TIOmarkets price action analysis. The Brexit negotiators have agreed to walk an extra mile. So this basically means that they have just given themselves just another extension, even though there's 1634 days since the Brexit referendum. Now, what does it mean for us trading pound USD? I'm going to go into that in a moment, but first, just a reason. I want to give you a reason why you should spend time watching this channel. So we do hit the targets, and the idea here was presented on Thursday. We basically hoped that the market would rally a little towards the upper end of the descending price channel, and then we would have a nice opportunity to have a meaningful short target at both target 1 and 2 zones. Now, because the market rallied only weekly and didn't stage a strong rally, then target 1 zone kind of didn't make any sense. But market moved to our target 2 zone and reversed there. So let's go and see what was important there. And actually, before we go there, just a reminder, we warned you on Friday that it's better to go into cash because there might be a gap over the weekend, and there was. Pound rallied 130 pips. So we can talk about that too. What does it mean for traders who were long, who were short? In general, in terms of trading strategy, is it better to stay in the trade over the weekend or just go into cash? But first of all, take a moment to subscribe to the channel so that you don't miss out on any of the moves. And also, you should only watch this video if you agree with this disclaimer and with the fact that we don't provide you with any investment advice. All the material made available here is for educational and marketing purposes only. Okay, so here we have pound into our time frame. And as you can see, we basically had the market rallied roughly from the zone that we had here, the target zone. And when the market was here, I was saying and if you haven't seen this, you should definitely go to TIOmarkets.com/analysis and subscribe to our email alerts. We basically said that because there's a high probability of gaps over the weekend, you should be careful and go flat. Now, there are people who don't listen to advice, and obviously they can do that. But some people were obviously long and they are quite happy with this, and some people were short. And those people, I'm thinking, might not be very excited about this gap. And the fact is, should we stay open over the weekend? The fact is that we really don't know which direction the gaps are going to be. So it could have been down as well as up. And because we can't know, then there's no edge. And we shouldn't be trading when there's no edge, and instead of stay in cash. Staying in cash is a trading decision as well as going long or short. Now, in general, I think because there's Saturday and Sunday and the markets aren't open, anything can happen, markets can't react to the news. That's why I tend to go flat before the weekends. I think it's wiser, it's just a prudent risk management, because there's plenty of opportunities to engage with the markets once they are trading and open again. And yes, it just makes more sense to me. Now, in terms of the current price action and key levels at the moment, I'm looking at market. Basically, it moved to the channel high, slightly above it. And we also have this regression channel here. This bullish regression channel that the market broke out of. This was definitely a factor here also. And now it seems that we have a engulfing candle here. a candle with range wider than the previous candle, and it's a downside candle. So this suggests that we're going to come down and possibly test this level where we have 23.6 Fibonacci around 33.70, and then if this doesn't hold, I think these most significant levels are somewhere down here. We have 50% Fibonacci retracement and this low from early today coinciding. So I think this level here is going to be significant. In terms of how the price is reacting, we do have positive news flow at the moment in the markets. There was comments that the European Union wants a fair competition and a sustainable solution for fishing rights. So, and there is some hope and belief that these can be delivered. So maybe as long as this news flow stays positive, maybe what we are seeing at the moment is just an kind of a retracement within the up move. Definitely the momentum is to the upside. With this kind of gap opening after good news, it is kind of common to market for it's kind of common for a market to move higher. So this there are technical factors here, but if the market comes down to supports and starts to sort of honor the supports and attract buyers, then there's a greater likelihood that we will push higher. So the litmus test of all these technicals is how is price reacting at these levels. And I think it could be said also about the sort of fundamental trading or news flow trading. If the market price action at key price levels supports your idea of the current mood or sentiment in the market, then you should be engaging with the market. If you don't see any sort of evidence from the price action as something that would suggest that they actually are, the big money is thinking the same as you, then obviously it doesn't make sense to try and trade. So the key levels here, and also obviously if we find buyers somewhere down here, maybe between 38.2 and 50% Fibonacci somewhere down here, then we could, I think, challenge these same levels again and maybe even go higher. But this is a market that is highly dependent on the news flow at the moment. So it's good to keep in mind where the technicals are, where the key levels are, but also follow the news and see how the market reacts to the news. This is all I have for you this time. As usual, I'd like you to trade safe, always trade with stops, and never overtrade. Thank you. See you in the next video.